everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Today we will continue our technical analysis with Tesla. Tesla ended today at $589.89, quite a big move down from the 50-day simple moving average of $675. So there is a lot to talk about today, and I hope that you will stay until the end of the video for some trading strategies. If you are new to my channel, please consider subscribing. I am an investor and a trader in Tesla, and I would love to share with you my investing and trading journeys. I would also like to express my gratitude to each and every one of you. Even though my channel is only in its infancy, I've received overwhelming support from each and every one of you. I'd really appreciate those who have watched my videos as well as subscribing to my channel. It means a lot to me, and I hope to continue creating more valuable content for you guys. If you have any other idea or anything that you'd like me to cover, please comment down below and I'll do my best to accommodate your requests. Thank you again, and let's get right into it. So let's start with the daily chart. Today, Tesla almost touched the 200-day simple moving average at 579. The lowest point for today was approximately $586, which is only about $7 above 200-day simple moving average. Looking at the RSI is not completely oversold yet. Oversold condition would have to be well below this green line here. So as is the case at the end of February and early March, these are the conditions for reversal. Right now, it looks like there's more selling to go. Looking at the downside, looks like Tesla has the potential to get to about 540, which is also a support from previous breakout. The next support would be approximately 499. There's also an S&P 500 inclusion announcement gap, which goes between $408 to $442. This means that on the day Tesla was announced that it will be added to the S&P 500, the stock jumped the next day from $408 from the day before to $442. So that is approximately $35 gap there. If Tesla goes extremely bearish, it could get to about $408. I certainly hope that it won't get there because we are looking to near oversold at the moment. But if we are looking at extreme conditions, know that Tesla could get to about $408 to close the previous gap. Taking a look at the weekly chart, the weekly chart looks also bearish. This one is a bearish continuation, and it does not seem to have any sign of reversal. RSI seems to be okay in relation to the price action. This one does look to be a double top, which is very concerning, and Tesla has a long way to go on the downside. So this is a scary looking chart. However, if Tesla can somehow bounce off of the 200 days SMA, it will make a new all-time high above $900. So that is the upside we're looking forward to. In order for that to happen, we need Tesla to deliver really well in Q2, and we need the market to cooperate. So both the S&P 500 and the QQQ needs to cooperate in order for Tesla to spike further. To the hourly chart here, yesterday Tesla seemed to bounce really strongly after pre-market touching the 200 days SMA of $578. It bounced really strongly within the first hour, and then it continued to consolidate around that time frame. On the surface, it looks to be a bull flag here, but that bull flag did not materialize to today. Today, Tesla barely closed the gap at opening and then continued down. So where will Tesla go from here? Right now, Tesla is closer to 200 days SMA than the 50 days SMA. So I do think that Tesla would cross below 200 days SMA somewhere in between 580 and 540 before it finds a bottom. Now, if it does not find a bottom at 540, then the next opportunity for it to find a bottom would be around 499 or 500. So at this point, we have to wait to see what the market will do. Tesla does not have any news in particular. It is falling with the rest of the market, and oftentimes Tesla falls or spike way more than the market on average. So that is something we have to deal with, the volatility in trading Tesla. As for trading for Tesla, I think we have to look at the price action pre-market tomorrow, May the 13th. Right now, I'm recording this video as of the close of May 12th, so it might not reflect tomorrow morning very well. But at the very least, I think Tesla will dance around 200 days simple moving average tomorrow. So the first way to trade is if Tesla leaves any opening gap, particularly opening gap down. So if Tesla opens, let's say right around the pivot line here of $565 or below that, that will essentially leave an opening gap of about 20 some dollars. That is an excellent opportunity to buy a call to see that Tesla go back up to touch 200-day simple moving average as 579, and alternatively going all the way up to about 599 here. So that not only it will close the gap, but it will go to the mid pivot point of yesterday, which is also a point of consolidation for the most part today. The second way to look at it is that Tesla would open with a gap on the upside. So let's say if it opens at around $5.99, which is about $10 gap up, it could initially go all the way to about $609 and then go back down to fill the gap at $589. So if there's an opening gap, I definitely think we should partake in that. And by opening gap, I think it should be at least $8 in either direction. And when you play an opening gap, you play exactly that, which is to bet that Tesla will close the gap. So let's look at the leap option for, say, June 2023. Last time we looked for $1,000. At the time, it was between $14,000 to $15,000. Today, it is between $11,000 to about $12,400. So it has reduced significantly in price. So I'm still pretty certain that I want to enter a leap option for call at around that price range, around $8,000 to $9,000 for $1,000 strike price out to June 2023. We're looking at 2 weeks out, potentially expecting a reversal, and let's see what a $700 strike price would look like. At this point, $700 strike 2 weeks out for May 28th. It is approximately $410. So it is not expensive at all. However, that is about $111 that Tesla have to move to the upside in the next 2 weeks, which is also very difficult at this point. Not impossible, but it's difficult at this point. That's why the premium is not very expensive. If you are looking at, say, about $640 or $645, which was the previous resistance, 2 weeks out, you are looking at about $1,300. This is a more probable strike price, $645 than $700. So of course the price for the option premium would be substantially higher. So I'm not yet ready to enter a call for swing trade at this point because there is no sign yet of a reversal. I'm patiently waiting for a reversal sign before doing so. I'm also not entering put, even though I still think Tesla has more possibility on the downside rather than the upside, because Tesla has moved down a lot in the last few days. The put premium has been expensive, so I'm not chasing it at this point. I'm just waiting for an opportunity. What I will do though is a gap trade in the morning if and when Tesla shows a gap of about $8 or more. That's when I will enter for a gap trade. Keep in mind that a gap trade can materialize within minutes. The moment that Tesla closes the gap or close to closing the gap, I take off my trade. And that trade could last very fast. It could be 5 minutes in the morning, could be an hour in the morning, but I do not go longer than that because a gap trade means for the stock to only close the gap and not more. So to summarize for strategy, I'm leaning toward a gap trade for a short-term trade or a call for a swing trade. And in order for me to have a gap trade, I need to wait for the stock to have either a gap up or a gap down in the morning of at least $8. Meaning that if it closes the day at $5.89 today, it needs to open tomorrow at either $597 or $582 in order to generate a gap of at least $8 in either direction. And I will play for it to close that gap or close to closing that gap. For a swing trade, I will wait for Tesla to fall below 200-day simple moving average to potentially get to about $540. I will then look at RSI and volume. If RSI crosses into the oversold territory and volume is above 100%, then I would potentially take a call for swing from here. With this time, however, I would not take a leap call. I would probably do a call of about 2 to 3 months out. If Tesla ever gets to about 500, I will consider a leap call for June 2023. I know that's a lot of information to take in. I'm sure we'll talk again in the next few days, but keep those price targets in mind. Map out your strategy, particularly when it comes to a gap trade, so that you can execute beautifully. Good luck to all of us, and I hope that the information is helpful to you guys today. Until the next video, bye.